Mark Selby, Chair and CEO, Canada Nickel Company, advancing the Crawford Nickel Sulphide discovery through to production the middle of this decade.
Mark, good to see you.
Good to see you, Matthew.
We see each other weekly via Zip. Here we are, face to face in South Africa. What are you doing here? You're a Canadian company.
Yeah.
Why are you here?
We are here because this is one of the best conferences in terms of seeing investors, corporates, and private equity.
Right.
Given the location, you get a lot of people in from Europe and also from Australia. So you basically can cover off two continents with one trip.
Okay, so new investors, basically.
Yeah.
But, you know, the next phase of investment for you guys is going to be fairly substantial. So just talk us through the types of investors that you're looking at, because you've got a feasibility study coming out at the end of this year.
Yes, yep, on track for end of the fourth quarter, and resource update, which will feed that feasibility study by the end of the second quarter this year. So, yeah, in terms of investors, you know, where we're really focused right now is again at this conference, you've got large Asian companies that are project partners and offtake partners. You've also got the good mining private equity funds, you know, that are keen to look for new equity opportunities. And obviously in the battery metal space, you know, there's not a lot of high quality nickel projects out there. So we had a pretty full couple days here.
Well, that's an interesting point, right? You say that, right? There's not a lot of big new nickel projects coming online. I guess all of those potential partners or investors will recognize that. But the market right now, very difficult time, very awkward. Is that part of the discussion, or because you're a kind of multi-decade, multi-cycle project, it doesn't really matter so much?
Yeah, no, I mean, today's price really doesn't have an influence in terms of you know, it's going to be 25 years in the PEA. We've made it pretty clear that we're going to have a 50 to 100% increase in the resource base that's in the feasibility study. So you're now looking at a 30 to 40 year operation. You know, what people with this kind of a project are really looking at the long-term macro and saying, you know, what does the market need?
Right.
You know, right now, obviously, you know, we, along with the entire market, have got whacked 40%. But the other dimension here is, you know, there's a lot of also good fund, you know, institutional investors here. So, you know, that's a big key focus for us. So again, you know, getting them to come into the name to make sure we don't get taken out too cheaply, too early. So.
Nice problem to have, isn't
it? Yeah.
But nevertheless, it is a problem.
Oh, yeah. No, I mean, we did our capital raise at the beginning of March at you know, $3.10, which is, you know, we're a third lower today, so it would have been a lot more dilution. So it was great to hit the market when we did. And again, we've got shareholders now in the base who that, you know, once they, you know, they're all sitting on the sidelines right now because with the macro overhang. But once we kind of get through that, and I think, you know, into the later part of the year with the EV demand, you know, continuing to pull the entire market through, you know, I think we'll see people step back in again.
Interesting. Okay, so you've also just put a press release out. Talking of scale, you put a press release out, suggests that there's a lot more to be had.
Yeah, that's the thing that I think investors should really focus on. So yeah, Crawford on its own, largest sulfide discovery since the early 1970s. You know, it'll be one of the 5 largest nickel sulfide operations globally. Last year, we put together 13 additional targets in the Timmins region. These deposits are identifiable just with geophysics, you know, and then because they're disseminated, you can test them relatively quickly and easily with the drilling that we're doing. So we've been able to start doing it. We haven't been able to actually go after the best targets first because it's melt time in Timmins, and so things are a little soggy for a while. And we've got some of our properties, there's a new First Nations involved that we need to get exploration agreements in place with first.
Right.
So we've basically gone into some of the middle of the pack targets, and the release yesterday was Reid. So this is a target that's, you know, a multiple the size of Crawford. And with our second hole, you know, we hit 400 meters, nearly 400 meters of the mineralization that we're looking for, and 80 meters, you know, of that mineralization looked like above average. So, you know, we're pretty excited that, you know, this could be another, you know, quite good discovery.
So based on the money that you raised, look cheap if you continue to kind of deliver these sorts of results.
Oh, for sure. No, I mean, the exploration upside with this, you know, in terms of drilling dollar per resource identified, you know, is massive with these kinds of deposits. And so 20 million of the raise that we did was flow through. So it'll be resource development. Some of that will be resource in terms of better defining the resource at Crawford. But, a good chunk of that is going to allow us to step around all these targets over the next year and see how many of them end up, being another Crawford.
Yeah, right. So the feasibility study thing is committed by the end of the year, fully financed.
Yeah.
This exploration, I know the ground's a bit soggy in places at the moment. You will be allocating, so how much of that as flow through is going in the ground this year?
20 million will be spent over the next 12 months. So,
12 months, not this year. Okay, 12 months, fine. And you're not going to get that reflected in your share price in the current market,
right?
For sure.
Yeah.
No, it's risk off. No one's paying attention to anything going on.
Yeah.
So how do you play that? Do you say, well, tell you what, maybe we'll just slow down the drilling for now, and we'll kind of move, get into it later this year when the market's going to back in play, or is it get on with it?
I think it's just get on with it.
Right.
This project all along has been, get on with it. We will be putting out a feasibility study, 39 months after we made the discovery, which for a project that would be the largest base metal project in Canada, that's kind of record speed. So I think with this, it's basically get the work done, and then when the market comes back, they'll look and say, oh, okay, they've made 3, 4, 5, 6, 7 more discoveries in the meantime, and so hopefully when they do come back into the market, we're at top of the list in terms of who they're going to start picking up again.
Because if I look at gold companies, right? Sometimes gold companies, they drill, and the projects get so big that people stop listening to the big number because it's the same. It's 5 million ounces, 7 million ounces, same thing. 5 million ounces, 10 million, same thing. For you guys though, in nickel sulfides, scale is everything. Life of mine is everything, because you get the economies of scale, and it's you get the attention of the majors or emitters at the rates with their balance sheet. So, what is the difference in terms of where you play perhaps a gold project versus what you're trying to do here?
No. Again, scale is important, and again to sort of distinguish yourself. But to that point, though, we're not going to add a 3rd billion ton of resource on top of the 2 billion or so that we'll likely end up with the resource at the end of this quarter, until we get full value for the first 2 billion.
Got it.
What we are going to do though with those other properties is again delineate the exploration potential, and another big reason to do it now is defensively. In a good base metal assets and an auction process, go out for 0.8 to 1 times NAV. You can go back over the last decade, and projects that were of a certain scale. That's the kind of value multiple they went out for. If you're a good project with a lot of exploration potential, those can trade up as high as 1.2 to 1.5 times NAV. So for us, $15 million of capital, to potentially get them, an exit multiple up towards 1.2 to 1.5 is a tremendous return on investment.
Absolutely is. Here's the thing: we're in Cape Town now. Been talking to lots of African companies with African assets, African plays. And one of the big conversations that are going on at the moment is the fact that, Africa is much more investable than some of these Western jurisdictions. Not least of all because we've seen a lot of conversations in terms of in South America, because this social unrest, but socialism and nationalism. But in Canada, you've got the old First Nations in play. That's stopped or at least slowed down quite a few projects. What's happening with you guys?
So that was the other big release that's just come out. So we formally kicked off our permitting process. So you file what's called an initial project description with the federal environmental agency, and as part of that, there's a impact assessment process that happens. We've put agreements in place with all 3 First Nations that we work with, and again, for the first time, we think this is the first time that's been done. Normally, the company hires a consultant who writes a report. You give it to the First Nations to say, is this what you think you do? We're in this case, there's certain chapters of that report where actually it's your land. It's your territory. You know it best. You write the chapter and make sure it's shaped in the way that you want to do it. So we're providing the funding, providing the staffing for them to basically manage that part of our report that'll get filed with the government.
That's interesting.
And then if you look at, in terms of the comments in that release, from First Nations, again, I think it, from day one, that's been a focus for us. That's the right thing to do. And you can see it reflected in the comments from First Nations. And again, in terms of that permitting risk, if you have the communities you work with are actually helping to promote your project, then everything can move as quickly as possible.
Fantastic.
So, yeah.
So I mean, I've not heard anyone do it that way. That's really interesting, really innovative. If I look at the rest of this year, feasibility study at some point at the end of this year, but what are the things that you've done? A bit of drilling.
Yeah.
What are the other things that you're managing along the way till end of 2022?
Yeah. So in terms of catalyst, the financing was a big one.
Yeah.
Filing that initial permitting document, also a big one. Resource update end of Q2. Feasibility study Q4.
Yeah.
We'll have these district scale exploration results, and then we'll have definitive impact benefit agreements in place with the First Nations groups, hopefully by the end of this year as well.
Okay.
We're quite well advanced along that path as well, and so we expect to have those in place before the feasibility study is complete.
That's really interesting, and all of the above makes it a very hopefully a very defensible position for you, which is important.
Yeah, exactly. And the other key piece is again, Canada relative to a lot of other safe jurisdictions, to Chile and Peru have made it increasingly difficult to build and earn financial returns from mining projects. What's been nice, Canada, Ontario, where we are specifically, is one of the few places that actually makes cars and mines nickel. And so both the provincial government and the federal government, have got critical mineral strategies. They've got mine to EV strategies in place. They've been providing funding. You can go and look at Ontario and Canada in terms of they provided funding to the car makers to retool their plants to make EVs. They provided funding to battery plants to set up battery plants in the province, and we hope once we get the feasibility study, once the provincial election is over, that we'll be able to be in a position to also get some of that funding, because they are really focused on trying to catalyze this opportunity for the province, because I think we do understand that if they want a seat at the table for the next 100 years in terms of how the EV market's going to unfold, they need to get in there in the next 5 or 6 years.
Okay, let's see what provincial and state government do to help you.
Yes.
You come on our battery show.
Yes.
Quite regularly. Here's an update on what's going on in the market. We talk a lot about China. We talk a lot about Indonesia.
Yeah.
And also some of the players out there in the marketplace. So what do we need to know about what's happening in China, given the kind of current recent ramifications of Russia, Ukraine, right? Relations between Russia, China, and maybe even the US kind of looking at China and going, well, just be careful here. We're watching brief going on. How's that affecting global nickel supply?
Yeah, so the key part, nickel supply last year was 2.6 million tons. 1.6 million of that is basically China and Chinese controlled parts of Indonesia. That only leaves 1 million tons of nickel for the rest of the world. And that amount actually has been shrinking year in, year out for the last 6 years. Russia is more than 20% of that number. And so, what was a sort of geopolitical risk in the nickel supply chain was fairly substantial before, and I think, people would have ranked it as a 6 or 7 out of 10 with what's happened. It's now a 9 or 10 out of 10. And so, the car companies, I think now are desperately realizing that they need to secure sources of nickel that, aren't coming from a, current, hostile country or a potentially hostile country in the next 5 to 10 years. So that it's great for a project like ours. And
fantastic. Yeah. In fact, we had a chap in here earlier. We were talking about it's an Elon Musk related thing, obviously, in terms of use cases for the different batteries. And, we looked at nickel's contribution at the higher end and maybe designing it out down at the lower end, but that holds no concern for you in terms of demand.
No, I mean, our view, and if you can go back 2.5 years ago to our very first sessions and talked about the fact that there's going to be 3 batteries, LFP, for the lower end with lower range, where the range really doesn't matter. You're going to have the high end, where you, again, for all of the North American car makers, they're focused on coming out with EV versions of their biggest trucks and SUVs first, those all have to be nickel. They'd have to have it. They'd have to trailer with a battery packet, off the back of it if they were going to power some of these trucks with an LFP battery. So, so for us, that high end will always have to be nickel, and in the middle, again, our view, there's not going to be enough nickel to go around to all the EV applications, and so what you're going to see is in that mid market, and Tesla's already doing that, and others doing it. You can have an LFP battery, or you can have a higher nickel battery, and so I think you'll see that emerge on a range of models. They'll just change that pricing to reflect the amount of nickel that's available, and that'll be the rationing mechanism to keep nickel supply and demand in balance.
And what's it looking like in terms of number of producers? We've seen some, high grade nickel projects here and there. It's all kind of very small scale at the moment. We've seen some Aussie companies coming through. It's quite some quite attractive ones. Yeah. Canada, well, handful. Let's say.
A handful. Yeah. Right. There's us in Ontario. There's a couple of good projects out in British
Columbia.
So this
nervousness around supply for OEMs and battery manufacturers more broadly, it's real.
Oh, it's 100% real. I mean, when there was just quote the other day about Elon Musk, musing about getting into mining. Yeah. The mining industry has not, really accelerated, a lot of production. I mean, we need to double. We need to double nickel supply by 2030 versus where it was in 2020. And other than China and Indonesia, there's a few projects in the pipeline, but you're probably talking at most maybe 50 to 100,000 tons of nickel, and that'll be next, half of what the market growth is next year. We need 10 times, just huge amounts more coming down the pipeline, and there's just not a lot of visibility on it, right? So.
Yeah, but the money is there. I guess you're having some of those conversations this week, but you've been talking to people for the past few months. The money's there when you need it.
Oh yeah. In terms of getting the
right, because that's always the important.
Having advanced the nickel project last decade, where people are not particularly keen on nickel, versus the current environment. In terms of the different pools of capital between debt, equity, and other structured finance. There's multiple people around that are.
The reason I ask is right. When companies come on here and say, "Hey, I need $1 billion. I need $2.5 billion to build this thing." The retail shareholders are going, "Whoa." Yeah. Look at your market cap compared to that. Yeah. This thing ain't ever getting done. I'm off ski. Right? Yeah. Whereas it's very normal on a nickel and copper project for projects of that quantum to get financed, and the constructs are there to do that. So again, doesn't hold any fear for you?
No. I mean, in terms of these types of, we work with Rothschild in my past life as a project finance advisor for a number of years. These projects can carry 60% debt. So that that $1 billion becomes 400 million. So in our case, it's 1.2. So say 500 million of equity. That we need to get. And then in terms of the opportunities to be able to fund that, again, the car companies are extremely keen to lock in, and they now realize that just having your name in a press release doesn't really help get your project financed. And I realize that's not going to happen either. So we put some fairly sizable numbers on the table with them to say, if you want this amount of nickel, this is the quantum of capital that you need to get. Right. We think with a couple of contracts, we should be able to help fill in a good chunk of that 500. In our feasibility study, we had PGMs in the concentrate that, because we, in the PEA, assumed it all went to the stainless steel industry, we didn't get paid for. Some of the PGMs will get paid for. And streaming PGMs for a base metal project, that's only a small percentage of your revenue. When you have a large mine life is helpful. So that could be upwards of $100 million of a capital for us in terms of streaming that off up front. So between the offtake partners and in worst case scenario, there's still a gap to plug. The way a lot of copper projects got financed in the past is you would have, Asian trading house, to come in for 20 to 40%. They paid, generally in the order of 0.8 times NAV for the project to get into the project. And that capital that they brought helped fund your remaining portion of it. So there's quite a...
So no one's getting diluted out of this thing. No. The constructs or the structures are there, been there for a long time, and the noises you're hearing suggest that the demand is there for you.
Yeah, for sure. And again, at the end of the day, if for whatever reason, because things change, the key is we have an asset that the large mid tiers and the majors would we believe ultimately love to own.
Yeah.
So in a worst case scenario, if we can't raise the capital ourselves, we'll just run an auction process. And again, with full value, I've got most of my money in here. I'm not interested in in the 2014, shareholders should be nervous because in that 2014-18 period, there's probably at least half a dozen to dozen projects where, to get their project built, they did a stream, a royalty, high cost debt, and then did 100% equity raise on top of it.
Wow.
It's like the upside's all gone.
Thanks for playing.
The CEO got to build their pet project, but they screwed the shareholders.
But that's
not interested in
not
that.
interested in that
100%. Yeah.
Okay.
Yeah. If for some reason the market's not there, we'll just run an auction process at the time. So.
Good to see you.
Good to see you, sir.
Yeah, enjoy the rest of your week. What you're actually shooting off quite soon, aren't you?
I'm off this afternoon, sadly.
Right,
I'm off to Korea next week.
Korea?
So, yes, for a series of meetings with
I know some companies out there.
Supply chain.
Right.
Key battery type people. So
it's the place to be.
Very full schedule. So.
Well, okay. Well, get up with that, travels. Maybe when you get back, you can tell us all about it.
Sounds great.